Hello my friends, for today's video I'm gonna address one of the most common questions I've received over the years. So this question is something along the lines of, I'm just starting off in trading, what should I do? Should I buy this course? Should I buy this EA? Should I subscribe to this signal? Well, I'm gonna give you my honest advice which should apply to the majority of traders. But first, let me get one inconvenient truth out of the way. This is something that very few people will tell you, especially those who are selling you something. This truth is that trading is really difficult and that you are unlikely to succeed in the long term. Ask yourself, how many full-time traders do you know of? Personally, I know many more doctors, more lawyers, more engineers than full-time traders. But why is trading so difficult? The markets are really efficient nowadays, and finding a sustained probabilistic edge is never easy. Gone are the good old days of the 1990s and the early 2000s, where if you were a trend follower, you could simply use a moving average crossover strategy and be profitable for many years. Secondly, trading is also probabilistic, and any edge that you might have will probably take weeks if not months to manifest itself. You will sustain periods of drawdown regardless of how good your strategy is, and it is very easy to go on emotional tilt. Take for example this backtest on a dollar-yen strategy I have here from 2008 to 2024. If I had gone live here, I would have thought this is the best thing since sliced bread, everything is hunky-dory, but if I had started here instead, I would have thought this strategy was trash. And lastly, trading is a really long learning process. You have to start by figuring out what strategies work for you, and then trade those strategies without making major mistakes, and then if and when market conditions change, you have to adapt and learn as you go along. So let me illustrate this with my own trading journey. This live portfolio here started from February of 2021, and is my first live portfolio that was developed entirely using StrategyQuant. I'm sure there are many of you who can trade much better than me, and if you're one of them, I'm happy for you. So this portfolio had a pretty heavy exposure to the pound yen and the dollar yen. Things were going pretty well from Feb 21 up until June 2023, where I was up about 135%. But then for the next 3 to 4 months, there was a lot of uncertainty regarding what the Bank of Japan would do with their interest rates. So there were lots of whipsaws in the market. I went into a hardcore drawdown until I was down to 58%. And I was not feeling too good at that point for sure. But since then, I've learned quite a lot. I've made a few changes to this portfolio. Things like I've added spot gold to my portfolio because it has a pretty good inverse correlation with the dollar yen. I now trade more strategies but at a smaller position size per strategy, which I think will improve the overall diversification of the portfolio. And I've also added a monthly about 5 to 6% drawdown limit, so hopefully such deep and rather sudden drawdowns should not happen in future. So the path to success is not going to be a straight line. There'll be lots of ups and downs, lots of setbacks, and you have to push through if you want to see the light at the end of the tunnel. So my honest answer to the original question is none of the above. If you are new, I recommend that for at least the first 6 to 12 months, you should buy as many trading books as possible and study them as hard as possible. I recommend reading independently for several reasons. Firstly, from a knowledge acquisition standpoint, this presents the best value for money. Most people out there are selling their courses for thousands of dollars, and you don't need to spend that amount of money when you're just starting out. Secondly, you can answer one very important question. Is your thirst for money matched by your thirst for knowledge? If the answer is no, you will probably not succeed long term. Trading is the hardest way to make an easy buck. And lastly, are you patient enough to succeed as a trader? There's a lot of noise out there. Trading is often marketed as a get-rich-quick scheme. Can you block out all of this noise and focus on becoming a good trader? I think this is the best formula to achieve long-term sustainable success because it forces you to depend on yourself. If you are always waiting for somebody to give you answers or signals, you will always be at their mercy. So on this long learning journey, you are going to have to find the intersection between what you know and what you believe in. Go in with an open mind. Apart from things like conservative position sizing and risk management, there are very few universal truths in trading. Here's an example reading list for somebody starting out. You can learn the basics of technical analysis, for example candlestick charting, using Steve Nissen's excellent book here. You can then proceed to position sizing by Dr. Van Tharp, as well as trading psychology by Mark Douglas. Or you can choose an all-in-one book like Trading for a Living by Dr. Alexander Elder, which covers all of the above plus some trading strategies. Or if you are interested in automated trading, I have added 3 books in the description which you can check out. I can assure you that none of these authors will tell you that you will get rich quick from trading. Try your best to insulate yourself from the tremendous amount of noise out there, especially those guys on social media. Retail trading is full of deception and plenty of people who are very eager to prove that they are much better than you. At the same time, you also need to find the software and the trading platforms that you need. MT4 and 5 are the most popular, but CTrader is currently doing very well as well. Once you have done so, I recommend opening a demo account as soon as possible. Demo accounts are great for 2 reasons. They let you learn the platform stress-free, and you can experiment with different strategies without breaking the bank. Before opening any trades, I suggest you find a way to record your progress. My FX Book and FX Blue are 2 very popular options. If I recall correctly, for my FX Book, you only need to open 1 account that you can subsequently link to many MT4 or 5 accounts, but for FX Blue, you need 1 account for every MT4 or 5, so it's a little more troublesome, but things might have changed now of course. I also recommend a trading journal to record down your emotions and thoughts for that day because it is important that you feel comfortable doing what you are doing. Of course, when you are demo trading, you should keep an eye on profitability, but really the focus now is on execution. You need to make sure you can execute your trading plan without excessive fear or greed. By the way, I also recommend nothing more than 100-to-1 leverage. If you are conservative with your position sizing, and most importantly, you do not add to your losing trades, it is unlikely you will need anything more. Many brokers offer leverages way higher because they know that most traders will be unable to control their greed and they will overtrade and blow their account. Trade this demo account for about 3 to 6 months. If you need help finding strategies, check out some of my backtested Forex and Gold strategies linked at the end of this video. If you are at least break even after this period and you are comfortable with what you are doing, you can consider opening a small live account. If not, it's time to reformulate your strategies based on your knowledge and your preferences and record your progress from scratch again. Try not to stay in the demo environment for too long because a large part of trading is learning to control your emotions. Don't aim for huge monthly returns like 20 or 30%. If you can at least break even, I would recommend going live with a small account, say $1,000. Try this small live account for another 3 to 6 months. If you can maintain your performance, you can consider sizing up. Otherwise, maybe you need to go back to your demo or back to the drawing board even. So as you can tell, this can be a really long process because you can go both forward and backwards. And most retail traders I know eventually gave up within a year. Don't be ashamed, of course, you can always move on to another hustle. One of the biggest benefits of automated trading is the ability to backtest your strategy over many trades and over many years, helping you to shorten the forward testing process. By trading a strategy that has at least demonstrated historical profitability, you have a better chance of being profitable moving forward. Of course, there are also many pitfalls of backtesting, and that's a subject for a separate video. So a profitable backtest is no guarantee of future profitability, like you have definitely heard many times in many disclaimers. But if your backtest isn't even profitable, then you should know you should move on to a better strategy. There's a very popular saying among salesmen: you teach a man how to fish, and you miss a valuable business opportunity. But as Benjamin Franklin once said, an investment in knowledge pays the best interest. Teach yourself how to trade, and you set yourself up for long-term success. Trading is like running a business. It's a never-ending learning journey, and chances are you will have to start before you feel completely ready. To all of you who are willing to embark on this difficult journey, I wish you luck, patience and resilience. For some of my back-tested Forex and Gold strategies, check out the playlist at the top and the bottom. I'll speak to you again soon.